Hey everybody, good afternoon. Tuesday, August 22nd. What's up, Mike Reed? Good afternoon, Bendant. Bendant. Good afternoon, Bandit. Ben, Min, Tom. Rose Petals in the house. What's up, Nick? What's up, Bill? Yo. Eddie, Vic. Eli, good to see you. What's up, DJ, Varun, Lath, Moon, other Ben. Alright, let's dive in. I'm an associated member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. I really considered keeping some of that TQQQ, and I just decided to close out and reassess. I also added on Microsoft, Google, and Amazon, but I want to emphasize how extremely small I am in those positions right now. I'm very, very, very small in those positions. Nothing else new here. Going over to the videotape, over to the charts, the S&P here closed down 0.25%, the Qs closed down 0.1%, and the IWM closed down 0.25%. There was good opportunity out there off the open. I thought that our morning meeting was super on point. We had some really good call-outs, and then the rest of the day was about as boring of an August summer Friday trading session as you can get. Just a really, really slow afternoon session. The close was pretty boring also. We got this pop here at 3 o'clock, sell-off into the close, and we closed pretty weak. At the end of the day here, we're left with a negative candle into that equilibrium zone. So this is an important day potentially. Even though it was a pretty boring afternoon, this is a pretty important day. Is this a pivot high in a downtrend that we are in since the start of August? That's the real question. Friday was a great opportunity for us to go long. We had a day 4 to the downside, extension on multiple readings that we like to look at, that just made it an incredible opportunity to get long. Yesterday's session was a difficult open, right? Because we weren't up enough to look short. We weren't gapping down to be able to come in and buy. It was a difficult trading session. And then today actually gave more opportunity than yesterday, just with how we were set to open. We had the gap up for the 3rd day of our bounce, and it was right into that equilibrium area. So any extension long that we were looking for on Friday, for the S&P and the NASDAQ at least, has been fully satisfied as of this morning's open. So the question is, what happens next? Do we create that pivot high and we go down and make new lows? Do we start to range out and go sideways in this equilibrium area? Do we create a reversal pattern that gets us eventually back up above 445 in the SPYs? I have felt that the highest probability situation, just given the time of the year, is sideways action. And second highest probability is that today is a real pivot high that leads to lower price action. So we'll see how that plays out. But this is definitely a potential pivot high in the market after our oversold bounce to equilibrium, which is exactly what we're looking for. So the game plan that we discussed in the morning meeting today was, if you do still have swing longs on from Friday morning, fantastic spot just to be booking additional profit, and you can begin to look short. I shorted some Qs even pre-market, some TQQQ even pre-market, that might have been, or I felt might have been a little bit premature, but I did it specifically in that way because of the longs that I still have on. And then I wanted to look for the opportunity to potentially get heavier the short side on signals. And that's primarily what we had discussed in the morning meeting. I know that there's still a few really good looking daily charts out there. This Google overall still looks fantastic since that earnings report. Amazon still looks pretty good. It would look a lot better if it could get back above 137.50. So there's definitely some good looking charts out there, but very hard to come in and do any new buying today at all on a day 3 gap up into equilibrium in a downtrending market. Instead, this is where you really should be looking to the short side of the market. So we discussed in the morning meeting today some of those opportunities. We discussed maybe shorting Apple versus 177. That worked pretty decently off the open. I know Dimitri was trying to work a range a few occasions into that 177 area, and Apple was actually pretty strong. The much better trades to the short side, one were Tesla. Tesla gapped up huge. I missed this when I was doing my own morning research. When we did the morning meeting and I was typing through stocks, I really noticed the importance of this Tesla 240 level that was gapping up above it into equilibrium. Was a particularly large gap. And we discussed in the morning meeting the idea of shorting Tesla 2 through 240. Just a phenomenal trade back through a level. Very low risk on that if you wanted to put it on, considering how Tesla typically trades. And you know, if the market fills its gap, which is what we were initially looking for off the open, that could be a great trade. Or I was a little nervous on this one. I shied away from it, but similar but different with the NVIDIA 480 resistance. 480 is a big level. It's pretty much all-time highs for NVIDIA. Again, I wanted to stay away just given that NVIDIA's reporting earnings after hours tomorrow, but Josh was all over this one. Excuse me. Josh was all over this one with just a great early short call when the market opened on shorting NVIDIA. That you know, was a great call, and I think you got some of the other traders on the team involved in it with you. So just a fantastic job. And that was pretty much it. The opportunity was there off the open today. Outside of that, I thought it was just a really kind of tricky trading session. We got the potential pivot high that we were looking for from the market. Now the big question is, what does this lead to? Today's high is really important going forward. If we can break this high, then you know you're not just getting this very quick, you know, short-term downtrend continuation that might happen otherwise. So for going forward, we want to pay attention to today's high for our indices. If we're able to negate today's high, it'll be a big win for the bulls and probably puts us even more in the camp of kind of just the going sideways price action, which is what I think is the highest probability situation right now. But until that happens, we're probably in a guilty until proven innocent type market where you're better off leaning to the short side still on small time frames and seeing you know, what if anything this potential pivot high can turn into. So that's a SPY. You know, the Qs look very similar. The Qs were strongest yesterday, significantly stronger than the IWM, gapped up almost the 21 EMA, so deep into that equilibrium area, and they also sold that thing back down. The IWM tried to be strong off the open, which had me a little bit excited. What we discussed in the morning meeting today was that the most bullish thing that could happen for the market right now would basically be if the IWM could show relative strength throughout the day, actually give a little bit of a continued bounce, because this is the one index that was still extended to the downside, was not able to get back to its equilibrium area just because of the relative weakness that it's had. But if we were able to get rotation, bullish rotation, similar to what we saw in May, June, and July, where the IWM takes a you know, a day of relative strength, and the SPYs and Qs take a little bit more of a break, so there's mean reversion there. That could be most bullish. And at one point off the open, it looked like we might get that. This first 7 minutes or so, the IWM had me excited, and then this thing just totally fell out of bed. You know, fine, you want to pull back to the 80 EMA on the 5-minute chart at 184.50 and create a pivot for me and hold in and recapture 185, fine. But, you know, by the time this third candle closed at 9.50, you knew it was shot. And then it was just a matter of really how bad can the damage be. And the damage wasn't too bad. You know, like I said, the afternoon trading session was extraordinarily boring. But these weeks right here, end of August, beginning of September, are, you know, some of the most boring trading that there is in a typical given calendar year, outside of maybe the very end of December, around the holidays into the new year. Also tends to be a pretty boring time. But we're in those late August doldrums right now, and you know, the midday price action is probably telling us, unless you know we're getting some serious downtrend action happening for some reason, maybe you know, going back to some of the market dynamic stuff we were discussing in the morning meeting today. You really don't want to be trading, you know, midday on these August trading sessions too much. You want to trade very little be super selective. The gap was able to afford us some strong opportunities off the open, and that was pretty much it. You know, for my own trading, I really did not do very much. I managed my swing trades. I shorted the Qs via T-triple-Q. Pre-market, I did pretty well with it. I tried taking that PayPal trade, and PayPal did end up closing well, but it just pushed me out. PayPal super strong off the open. I got in on this inside 5 versus lows, so I got stopped out of that for a loss. And I said it even at the time I was entering it. I was like, I really like this PayPal relative strength. I like that it got the upgrade or price target increase that it was able to get this morning. I like the daily chart setup on it. I love the opening relative strength. The concern from the beginning on the trade was that the market could cause the trade to fail. And that's pretty much what happened. Just market weakness here between like 9:40 and 10 o'clock caused the PayPal to push me out and stop me out before the trade worked. And it is what it is. You know, I did not take it with a lot of risk. It was a small loss for me because I didn't come in with a lot of risk. Why did I not come in with a lot of risk? Because the market is one of the most important layers of probability. And if I'm not confident about the market, or if in fact I actually think that the market is working against me, which is what I thought when I got into PayPal, that can outweigh the relative strength that got me excited about the stock to begin with. So that was just a pure straight loss for me. Never got my risk covered. I tried to average down when the ADMA caught up to defend this low a little bit, but it just added a little bit to my loss, which is fine. So it did really well with T-triple-Q, not so well with PayPal, and then again just some small stuff with Google, Amazon, and Microsoft a little bit. Google was the best one. Google had great relative strength compared to the other FANG names. The first long I called out I didn't take, and that was this inside 5 and up here at 9:40. You could see the Qs being really weak and kind of selling down, but approaching the ADMA at the 940 candle. And you know, even given a hammer here, which in a strong market, this might be the bottom for the day. We know we're not in a strong market, so we got to be a little bit more careful. But getting the Qs attempting to give that pivot, I was like, if the Qs can just give a bounce here off the equilibrium area, Google's the strongest one out there, and it could maybe go. And even with the Qs actually failing on that pivot, the Qs were still able to go. Great inside 5 and up. That's not the one that I was involved in. I ended up getting involved at 10 o'clock off this pivot. And it was the same thing. Just good looking relative strength there. Saw it, got involved, caught a good move. I sold some around 130, kept a little bit, held it back, and I'm deciding to keep that overnight a little bit. And yeah, that's pretty much it. There's some names that are really frustrating me right now. This Roblox is incredibly frustrating. I know we looked once again for a potential RDR in this thing. It's day 1, 2, 3, 4, 5, day 6 to the downside. This thing has basically gone straight down from 32.50 post earnings down to 26.50 with no bounce, no satisfaction of extension, continued relative weakness, not even being able to bounce when growth bounces, not being able to bounce when the market bounces. I mean, this thing has just been the worst of the worst. And you know, once again today, just totally failing on giving some sort of RDR and closing at lows. So that's probably the most frustrating name that I've been trying to focus on out of any of them. But you know, just is what it is. I don't think this degree of downside extension in Roblox can last forever. As a matter of fact, I know it can't. But the extension and irrationality, if you will, of the stock can continue for longer than I can remain solvent. So have to make sure that the risk management's in place, the sizing is in place. And yeah, that's pretty much it. I feel like I'm disappointed that the bulls couldn't hold today and better. I thought we actually might get a better close because we didn't sell off midday. So part of me feels disappointed, but at the same time, this is exactly what we were looking for and exactly what we were expecting in the morning meeting today. So there should be absolutely no surprises there. And that's pretty much it. That's pretty much all that I've got for you guys. Not really too much. Slow day. I'm happy to answer any questions if we have any. Trying to pull up the YouTube at the same time here. Nothing in the DTF. Anything in YouTube? We don't have anything in plan for virtual trading for open house right now, Robert, but I'll let you know. From Kevin G, is it safe to assume you were risking that 128.55 candle in Google? Yeah, the original plan, you know, I might have kept a little bit, honestly, as a core position that I would have kind of just been getting back into Google bigger picture because I've done so well with the name and given some more room. But basically the trade was to be long versus the 955 low, which is 128.55. That's the pivot low, off relative strength, your next higher low in a potential uptrend here in conjunction with relative strength, in conjunction with a market that at that time seemed like it wanted to improve a little bit here, which once again failed and the market did nothing. But that's exactly what the thought process was, Kevin. Anybody else? I'm happy to do a quick one today. I got to get back to New York City, so I got to catch a train. So if there's not many questions, I don't mind doing a quick one, but of course I'm always happy to answer questions. And here's one from Dave. I'd like to ask about the stock price and price increments. Right now I'm in Palantir, which is a $15 stock, and have been buying and selling in 20-cent increments. I am not trading it in a way I would usually do, so where I get stock and then sell half. I'm prepared to participate all the way down to much lower prices and progressively get heavier. I have a firm game plan for all of this that would involve selling calls against the position as well. But right now I'm up money in the position and think that it won't come to that. When trading a stock in this way, where you're just buying and selling without stops, you usually change your price increments. So I never ever change the price increments once I'm in it. So you need to be very comfortable with the risk of, if your plan is to buy a Palantir every 20 cents and sell it every 20 cents, and let's just say you're doing 100 shares per, and it's a $15 stock, let's say you're starting at 15 just to make the numbers easy, you need to really understand what the risk on that can look like in a market-wide sell-off, which I can kind of tell you right here on one of my spreadsheets real quick, pulling it up. So at 20 cents on a $15 stock. So in theory, if you were to buy 100 shares of Palantir starting at $15 every 20 cents, and you did that down to zero, which I know is not the plan, and it never upticked 20 cents ever, so you never got a single sale, you would lose $57,000. If you did it to $7.50, which is a 50% drawback, that would be $14,400. If you did it to lows of December 2022, which is basically $6, it'd be about $16,400. So you need to be prepared for all that. And again, that's assuming that you never actually get any sales. If you get any sales, then every time you get a sale, you're putting $20 in your pocket. So, you know, you need to be really careful about that. You don't want to get stuck in a hard, heavy sell-off, and right as the thing is actually about to create a pivot low and bottom, you're like, oh my God, I can't handle this risk, I'm out. So it's usually, what you're describing there is usually not what I recommend people to do, because most people probably can't afford the risk. I mean, in theory, let's just use the $6 low here. And what did I just say that risk would be if it went down to $6? About $16,400. In theory, you have a math problem that you would want to think about. You could take $16,400 and put that to risk versus $6 on this thing, the all-time low, if you want to assume that's a worst-case scenario, if you really, really believe in the stock. And then you just have a risk, math problem of how many times, can this thing move 20 cents? If every time the thing moves 20 cents, you put $20 in your pocket, so you need 16,400 divided by 20. You need 820, if I'm doing this math right, 820 20-cent fluctuations before the stock is able to get to $6, just to be break even on the risk to $6. Is one way that you can look at that math. So, you know, you can do that. You can absolutely do that. And at a certain point, you know, it maybe if you had been doing that this whole time or whatever over the course of this entire year, maybe you'd be there already. And then in theory, you would be able to own Palantir down to $6 with no risk and continue to do that and continue to make more and more and more and more money every single time this thing moves 20 cents. What I usually recommend for people to do is actually take trades and then do this type of cash flow approach on their core position. Meaning, if you bought Palantir back through $14 on Friday, which was definitely a trade, because $14 is the level that we kind of talked about. So if you bought this thing back through $14 versus lows and you took 30 cents worth of risk, if you bought a, you know, I don't know, maybe this isn't the ideal example because 30 cents risk there might be a lot for this tier size for some people, because again, the strategy is not going to work if you can't take real tier size for it. So, you know, every, what did I just say it was? About 30 cents worth of risk? 32 cents worth of risk? So every 1,000 shares you take is $320 worth of risk. So if you take 2,000 shares, which would give you a 1,000 share core position after a 1-to-1 kick, you're risking $640 in it. And then, you know, you sell 1,000 shares at $14.32, you get your 1-to-1, and now you have 1,000 shares. And you can take that 1,000 shares, and now you can start to do that at 20-cent increments. So let's say your first sale from that point is going to be $14.50, 20 cents up from your 1-to-1. Let's just make the numbers simple and call it $14.50. And then you sell at $14.50, $14.70, you have 1,000 shares, right? So that's 2 points on the upside. So that enables you to offer out $14.50, $14.70, $14.90, $15.10, $15.30, up to $16.70, I think, is where you would run out of stock. That's pretty good, up till $16.70. So now you're giving yourself a range on that 1,000 shares where you can work those increments of buying and selling 100 shares between $14.30 and $16.70, as long as the stock stays in that. And then the other thing you could do, so you got a 1,000 share core position, your stop on that 1,000 shares is $13.68, $13.67. That's your 1-to-1, right? So if you get stopped out at $13.67, the trade's a donut. But every time you're able to sell and buy back for that 20-cent increment, it's no longer a zero. It becomes $20 trade, $40 trade, $60 trade, $100 trade. And that's assuming that the trade fails, let alone if the trade actually works. Let's say that over the course of the next couple of days, it works its way up to $15 or whatever, and you get, you know, 5 20-cent sales at $100 worth of risk. You could now take that $100 and give yourself a wider stop loss or give yourself more buying. So instead of now the range being $14.30 through $16.70, you could take, you have 1,000 shares, so 20 cents on 1,000 shares is $200. So you could now basically buy like one more 100 shares at $14.10 or something like that. I know my math's a little bit off because I'm just doing it on the fly here in my head. And continue to kind of work that strategy with an extra piece of stock a little bit lower. So the more kicks you get in that $14.30 to, you know, more sales you get in that $14.30 to $16.70 range, the wider you can make the range over time and kind of build into it. So that's like what I'm describing here is exactly what I'm doing in Unity, basically, where I bought Unity as a trade, I think on this day, through like $32 or whatever. And I did really, really, really well with it, right? You know, nice little solid five-figure win for me in Unity. and had cleared out of my position entirely. I didn't have any left up here at $50. It got too extended, and then I said, like, all right, I've got this. Let's just say I made $10,000 in it. I got this $10,000. I can start now rebuying. I think I started it. I was waiting on the market. I didn't trust the market. I thought the market was going to pull back. Blah 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 blah. I think I waited till like $38 or $37.50, and I said, all right, what if I take the $10,000? Let's just call it that I'm already up, and I do the same thing, starting by buying 100 shares at $38, and I buy 100 shares every 25 cents down, risking the $10,000 that I've already made. So going back over to my spreadsheet, 25 cents, if I've got $10,000 worth of space, it gives me $7. So that means that if I start buying at $38 and I buy 38, 27, 75, 27.50, 27 quarter, 37, 36.75, 36.50, I just said $7, I'd give back that $10,000 at 31 here. So I can make 31 my out. But every single time I can make 25 cents, the 25-cent move, then that P&L that I've made in it goes from being $10,000 to $10,025, $10,050, $10,075, $10,100, $10,200, $10,500, adding up that way. So therefore, $31, which was my break even, eventually dribbles a little bit lower and dribbles a little bit lower and dribbles a little bit lower, and it gives me a wider net. My ideal situation is that Unity doesn't do what it's doing, going straight down, and then I'm just going to give my 10 grand back and stop myself out of my position. My ideal situation is that it does a little bit more of what it's done over the course of the last few days here, and starts to really range out between 33 and 38, and I can just make that $25 over and over and over and over again all day, every day, and then my $31 break-even stop loss eventually becomes a $30 break-even stop loss, which becomes a $28 break-even stop loss, which becomes a $25 break-even stop loss, and eventually I've got a really good company with such a wide net that I can kind of continue doing it forever. That's the ideal situation. I'm willing to risk everything that I've made to see if I can come up with that ideal situation. That's what I've been able already to do in Snap. So like Snap at this point, I don't have the numbers in front of me. Snap, which I am also doing this in with the same exact concept, has to go to like $3 for me to get to break even. So maybe Snap works its way towards bankruptcy. It's definitely not been a great company, but I've already made so much in this by implementing that, and I've been doing it more or less for this, for like over a year, that I've been able to make so much on those increments that if I want to be willing to risk everything that I've made, it's all the way down to like $3. And I love this so much because I feel like, obviously 3 is not 0, I could still give back everything, but I feel like I own Snap as like an income producing property for me, where now every single time this thing moves 10 cents, I just pocket some money and pocket some money and pocket some money, and that spread becomes even wider for me on where I could potentially give it to. And as long as Snap basically stays solvent, I'll be able to continue to make money in this thing like forever. And so that's kind of how I think about it. And again, I prefer what I was talking about with more like what I did with Unity than kind of what you're describing with Palantir. That you can absolutely do it that other way around. And that's just because I like to risk money that I've already made. I like to risk money that I've already made more than anything. Risking money that I've already made is how I like to make money. I feel very confident with it. I never lose, my principle, my risk. Because even for you, look, I don't think Palantir is going back down to $6. But what do I know? The whole market could crash, right? So, you could take that, whatever I just said, $17,000 worth of risk, and see if you can get 820, I think that's the number we came up with, 20-cent movements, and then you know exactly where you need to be, and if you're comfortable risking $16,000 in it, then you in some ways can own the monopoly piece of the property and collect income from it in the same way that I kind of feel like I do from Snap at this point. But it's you're not just doing it with money that you've already made like I'm trying to do with Unity. The Unity probably has a much higher probability of me giving back all my profits and me stopping me out than Palantir does of going to $6 or Snap does of going to $3. But it's just all kind of, it's just all math, right? It's just all math and game planning. That's all trading really is. It's math and game planning in conjunction with study of supply and demand in the marketplace via technical analysis and an understanding of the companies that you're involved in via fundamental analysis, and putting it all together in a game planning based on tier sizing and risk spacing. That's really all trading is, which I know I made that sound simple maybe, but it's obviously not. But I appreciate the question, Dave, and I hope that helps. As a thumbnail designer, if you want to do it on a volunteer basis, I would love that. I need a volunteer for that. Seems simple enough, right? I hope that helps, Dave. Anybody else have anything? Otherwise, I'm going to wrap it up because I got to catch a train today. Cool. And feel free to reach out to me offline a little bit also if you want to talk a little bit more details on how that risk map, how I just was able to come up with that $17,000 number that quickly, because those numbers are very accurate. Any thoughts on, because you saw that I shaved? Yeah, I don't have strong opinions on retail, to be totally honest with you. Target's a disaster. I like TJX. I think people love their bargain shopping, especially as the spending power goes down a little bit. I'm not a big shopper myself, so normally I like to trade things that I really know and understand. I want to tell you, I love to go shopping, and I spend a lot of time in Macy's and Target and TJ Maxx and all these companies, and because I do that with other companies where I just really can get a feel for it based on utilizing the world around me to give me information. But I'm not a big shopper, to be honest. I'm not really a big clothes shopper at all. I spend a lot of money on experiences. That's where I like to spend my money. I really don't spend a lot of money on things. But different strokes for different folks. So yeah, I actually went into it. I think it was a TJ Maxx on Houston Street somewhat recently, just to grab a quick gift for my dad's birthday, and that was like the first time I feel like I walked into a brick and mortar clothing store in like probably since COVID, probably since pre-COVID. But I don't know. It seemed like there were some customers in it, but I don't know what to compare it to because I never go into anything. I mean, I'll buy stuff online sometimes, but I don't ever go into brick and mortar retail stores. I mean, I'll go into I buy groceries, so I'll go into a Walmart or a Rite Aid or a drugstore or something like that once in a while, or obviously grocery stores. But I really don't go into brick and mortar Macy's. Macy's. I probably haven't been in a Macy's since I was in high school. So yeah, I don't have strong opinions for you on it. I love this TJX chart though. So yeah, so I don't got more for you there. All right, gang. Let's wrap it up. Have a great night, everybody. Great job this morning. Morning meeting game plan once again on point. Have a great night.